Welcome to CNBC Africa Space Show. I'm Arnold, Kwizera, coming to you from Rwanda's capital, Kigali. And today we speak about reattracting FDIs, scalability of small industries, the difference between a startup and a small business, and how best to attract investment back into the continent post-COVID-19. As always, you can tweet us at CNBC Africa or tag me directly at The Real Kwizera. Now we'll bring you a distinguished panel of experts, and this time spread out across various parts of the continent. Starting here in Kigali is Ntudi Moyelo from Rwanda Finance Limited, where he is the strategic advisor and lead coordinator for the newly created Kigali International Finance Center. From Kampala, from Uganda, we have Sandra, a multi-entrepreneur. She's the CEO of Fresh UG and kokoballs. Sandra Asimwe, she'll give us a perspective as a startup owner. And finally, he was voted last year's GQ Business Leader of the Year, and he's the CEO of My Growth Fund, South Africa, Vusi Tembakwayo, out of Johannesburg, South Africa. Thank you, ladies and gentlemen, for joining us. And I want to start with you, Vusi. COVID-19 has seen sizable capital outflow from the continent, and predictions are it may take us some time to go back to previous investment figures. Now, how do we reattract investment back into Africa?
It's a good question. I think that so Africa's investment story has really been built around macro GDP economic growth that's been higher than many other parts of the developed world. And we know now off the back of COVID that that's not necessarily going to be the story. Then there's a second tranche of capital that's really been driven around development. So this is capital that's either impact-based, infrastructure-based, or capital that uses the United Nations Sustainable Development Goals to domicile itself in the continent. And I think that that's where we're going to need to focus our efforts around attracting new tranches of capital. Capital that's going to be developmental in nature and capital that's going to help us foster the next generation of infrastructure development projects in the continent. So think here about health, think about road, rail, think about education. That's really the kind of capital that we're going to need to look to attract as we seek to rebuild African economies, particularly south of the Sahara Desert, what's called sub-Saharan Africa.
Ntudi, I want to bring you into the conversation. You are responsible for, creating strategy to attract this, and this is a newly formed financial center system. Now, where is that money going to come from, and what are you going to do differently to attract investment into, one, a country like Rwanda, but two, into sub-Saharan Africa?
Thank you for the very good question. So when we talk about FDIs in Africa, we first should look at what has been the story so far. And the story so far in Africa, we can say, has been around three profiles. One is those extractive countries, like DRC, for example, or let's say Congo, like the small Congo. So countries that have resources, natural resources. The second, big economies, like South Africa. And the third one, which is a good one to look at, is Ethiopia. Ethiopia receiving FDIs, not because of the resources, but because of those industries that they are building. So for those three, you have different types of investors. And in the context of what we are doing here in Rwanda, we want to make sure that we create the ecosystem and the framework for those different types of investors. So what are we talking about? Number one, investors that are looking at large projects, infrastructure projects. We want to see them more active in the continent, and we believe that going through the capital market, going through listing of projects is something important. And today, we don't have onshore the continent any place that will bring to those investors projects from anywhere from the continent for them to invest. So that's one. Second, when we look at projects that are, I will say, closer to the real economy, we see also a gap in terms of social impact investment. And this is really something that we want to attract in Rwanda. And for that, again, for the benefit of the continent, we think that social impact investors should have a matrix where they can easily see that a project is in line with their investment guidelines. So that's number two. And number three, we will say simply that any investor coming in the field of innovation, and here we can talk about fintech, we want to see more investment and FDIs into fintech, should also find a house or a home in Africa. So as a response to your question, we want to make sure that the different types of investors looking at FDIs will find the right fit in a country like Rwanda when they're coming into Africa. And from Rwanda, we want to attract the project from our neighboring countries, from the continent, for them to invest. That's in a short, my answer to you.
Sandra, I want to bring you into the conversation as someone who's a startup owner. You've heard what Vusi says, you've heard what Tsundi says, but your experience is quite different. But so as a startup owner, how do you think governments, one, should go about helping businesses like yours attract investment so that they can scale up?
For starters, I think we need access to capital that's not expensive. Right now, we are having a hard time as entrepreneurs in Uganda because we don't have access to funds to boost our businesses, especially during this difficult time. And that can be done through interventions so that we can have less lending rates. For example, we have access to grants, government grants that are geared towards young entrepreneurs like us. Then I think access to the internet is very important because a lot of young people right now are being left behind because the internet is extremely expensive, and yet it has become a major means for us to carry out business. I think with the New World Order, what our governments need to do is give us a wider reach when it comes to the internet, and also make it affordable for even the most lay person, because it's no longer a luxury, it's a necessity to carry out business.
Vusi, you heard Sandra there. She's talking about things like access to internet, good infrastructure. Those are still the hurdles for startup businesses and small businesses on the continent. Now, when should we have this solved as a problem, and what's the right way to tackle this?
Yeah, that's a great question. I think that, so first, I completely agree with Sandra's assessment around the provision of capital markets. Capital remains prohibitively expensive for many SMEs. There are a couple of reasons for that. The first is that many African sovereigns, these are governments, have not yet understood that there is a big difference between an SME and a startup. And as a consequence of that, they're approaching them the same way, and they're not succeeding at building either. There's a massive difference between the two. The second is that capital markets tend to be shallow and dry. So you don't have a large amount of money in the private capital market system building small businesses and building startups. Again, both of those are different, but you don't have deep amount of capital to fund those businesses. And the funding instruments are not particularly complex or sophisticated. So it's either an equity conversation or a debt conversation, particularly in those early stage of a business. And because we don't have a complex or sophisticated funding mechanism, it makes it very, very difficult. Overlay this with sovereign risk, political risk, and a whole host of other risks, then it means that even if you're attracting external capital, it's got to generate huge amounts of returns for it to be worth the while for investors. So all of those are issues I think that we need to address. Your question, though, was quite pointed. It said, how should we address these? I tend to be a free market Smithsonian economist, right? So I think the most effective thing for government to do is to have real regulation and legislation that is current and that is contemporary. But that's where it should end. What government should not be doing is playing referee and player at the same time. So once government has made available in each of these different geographies regulations that are fitting for where the market finds itself, it then has to get out of the way and allow the private capital players to get involved in actually making available that capital. What we've tended to find in many of the African countries, South Africa is not dissimilar, there's South Africa, Botswana, Swaziland, Namibia, and a whole host of other African countries, is that generally what happens is the government makes the regulation available, and then the government also wants to play provisioner of capital, and that tends to create a conflict in the market.
Vusi, you've mentioned a difference between startups and small industries. Let's stay there. What's the difference between the two, and why should the policies for those two differ?
They are very, very different. So the way you build a Facebook is very different to the way you build a small corner shop that sells, this fantastic fashion item, for instance, that I've got on. And those are different for a couple of reasons. The first is that a startup starts small but aims to be big and is built for scale, right? Whereas a small business starts small and tends to stay small. They tend to be lifestyle businesses that are profit-driven and that support the business owner. And then on top of that, the people immediately around the business owner. A startup has a massive ecosystem effect, is hugely disruptive, and changes the very industry it gets into. So if you are starting a telecommunications business, an ICT business, or a media business, as a small business, you're competing with the traditional players. As a startup, you're looking to disrupt those traditional players, which means by definition, you want to scale and scale very quickly. So let me ask you the question. How many African small businesses can run for a decade and be loss-making? The answer is very little, because even in many African countries, South Africa not excluded, there is a limitation of how long you can run a business to be loss-making for, beyond which point you then begin to get things like audit disclaimers from your accountants. So an Amazon, for instance, ran for 13 years making losses. In South Africa, the minute you run it 3 years making losses, then your auditors have got to issue a disclaimer about the going concern status of your business. And that's precisely because the regulatory environment is built for small businesses. It's not built for startup businesses. And so you need a difference between those. In Mauritius, they've got something called a regulatory sandbox. And so what they've done is they've created a regulatory environment for startups, which is different to a regulatory environment for SMEs, to attract capital, to support those startups, but also to make sure that in their provision and attraction of capital and support of those startups, they don't conflate the startup and the SME. Africa's biggest problem, in my mind, is that it has massive challenges: education, infrastructure, healthcare, and you could keep going, but it's approaching these big, big problems with small business thinking. What you need is to approach big problems with startup thinking, because startups are built for scale and built to disrupt the big businesses.
Ntuli, bringing you in as someone who's trying to create policy, where are we getting it wrong in terms of the policy still being similar for these two very important pillars to how to rebuild businesses, but getting the least traction?
So we should not put ourselves in a position where we don't see our own development. I understand the comment coming from Vusi, and I see the struggle from coming from the startup. But look at those African countries that have started to implement a specific framework for those startups. And again, I don't want to talk about Rwanda, but yes, we are one of the countries who is implementing a startup act. And we are not the only country in Africa. There are maybe 2 or 3 today. And this is because we understood that there is a difference between an SME and a startup. We understand that the way taxation should be for a startup should be different from an SME. And same-wise, when you look at the need of capital of those type of entities, we are sorry, a startup cannot go to a bank and simply get access to a loan. It will not work because the startup will not comply with those requirements in terms of financial statements and guarantee and so on. So this is where the capital market will also play a role. And if you recall what I said at the beginning, there is a need to align the profile of investors needed for the specific profile of investee. In the case of a startup, what we need is to see more angel investors. What we want to see for startup is to see more innovative way of funding, such as crowdfunding, peer-to-peer funding. So now the question is, in Africa, where are you able to find those solutions? So we need to align again the problem and the solution.
So I want to stay with you there. And I'm going to be a little bit on your case because you are dealing with trying to change policies. First, do you feel like the policies and the change of policies across the continent are moving fast enough?
No, they are not. Let's be clear. They are not. They are not because you need, number one, a political will, and some of our countries, they don't have it. Number two, even when you have the political will, you have those heavy administrative burden that you are facing. So it's not everywhere that you will see someone, a country saying that it is going to amend 23 laws within 1 year. If 1, 2, 3, 4 laws are being changed in a country, it's already a big success. So to your point, no, we are not going fast enough, and this is impacting our SMEs and our startup. Now, what can we do to change that? I think it's always good to see examples of countries that have done it. You know, we African, we are like any other human being. We like to compare ourselves. So what we wish here in Rwanda Finance is, from our experience, to create that dynamic of having Kenya tomorrow, having Mozambique tomorrow, having other countries in Africa saying, oh, you know what? If Rwanda has done it, let's do the same. So to your question again, no, it's not going fast enough. And yes, we need more political will to make a move.
Sandra, are you convinced by what Ntuli is telling us in terms of, you know, the need to change laws, which is taking forever? How fast is fast enough for a business like yours?
I think some things are easier implemented and faster. I think when it comes to policies and changing the laws, those might take a longer time, and we might not see the effects immediately or the solutions as fast as we want them. But I think there are different steps that have been taken. Even in Uganda itself, we're getting government grants for smaller businesses. But as we said, there's a problem, or as Vusi said, there's a problem when it comes to separating a startup and a small business. I am in the startup business, so I'm finding particular challenges. And we hope that there will be faster movement in areas that can be improved, especially when it comes to the internet. We are really struggling when it comes to the internet in terms of access and selling our goods because it's just so expensive. That, I don't know if anybody is watching and can help with that. We need help because we're 70% youth, and if we don't have access to the internet, we're all going to get left behind, especially with the new world order.
One of the challenges we have to confront is we have not yet developed a culture of angel investing that is broadly understood. So there is an angel investing network, for instance, that does great work in the continent. But it's easier to find high net worth individuals or family offices in the continent that will invest in traditional assets, so they'll have money in stocks, equities, bonds, or property, or they will externalize currency outside of Africa and put it particularly in Europe. So you see a lot of that. What we don't have is a culture where high net worth individuals and family offices at scale support early stage startup businesses. Now, this is an important point to make because for an early stage startup business, it doesn't yet attract commercial funding from the likes of a bank, which means somebody has to play that gap. And absent of angel investors, You don't have somebody taking the slack at the very beginning for venture firms to pick up and then eventually for banks to pick up. And so what happens is startup businesses are forced to operate like small businesses to become profitable so that they can attract traditional funding from the banks. And by their very nature, that robs them of their opportunity for scale and growth.
Vusi, I want to stay with you there, right? You've grown a venture firm, a venture capitalist firm. Angel investors, when they're going into any market, any business, let's say you as My Growth Fund, you want to invest in a business like Fresh UG or kokoballs UG that Sandra is running, right? Sandra has a limited market in one country. There's a lot of protectionism happening on the continent. Businesses can't scale across. And when you look at the angel investors or funds like yours, you're looking for businesses that are going to be able to go across 50 million plus people, right? Our middle class is still really, really small. So meaning the people with the spending power are still very limited. So how do you convince that angel investor? How do I convince you, if I'm Sandra, to invest in my business?
So venture firms are interested in valuation growth, not necessarily profitability. And that's an important point to make because many founders don't understand that. A venture firm is interested in valuation growth. And so what you have to be able to do is to make a case for what the valuation of your business is built on. Typically, the valuation of a business is based on three things. The first is something called TAM, the total addressable market. So that's the size of the market. The second is your ability to scale quickly and acquire as much market share as possible. And the third is your ability to get customers to become repeat customers, right? So if you're selling cocoa, say, and you sell a unit to one customer every month, one of the valuation drivers is can you begin to sell 2 to 3 units to that same customer every month? So that's how you make the case for a venture investment into your business. Of course, it's made complex by things like geographies, say. So for us, we're a Pan-African fund, and we work with partner funds in different countries because they have the local insight, local knowledge, and local intelligence. But at the end of the day, those drivers are exactly the same. How big is the market? What's your ability to scale and scale quickly? And what's your ability to get your first customer to become a repeat customer? Those are the main three things that drive valuation growth. And as a consequence of that, will make the venture investor want to invest in your business.
Tudi, I want to ask you to play a little bit of devil's advocate. Now, on the other side, you're trying to bring in these investors like My Growth Fund and the likes, and you're bringing them to startups like kokoballs. What do companies like kokoballs, what aren't they doing right to ensure that VC, that angel investor, is attracted to them?
Your question is actually key in what we want to achieve. And again, I go back to the points raised by Vusi. You know, I have a background. I'm coming from 2 other financial centers, being Luxembourg and Singapore. And those 2 centers have something in common. They are part of a bigger market. What we need when we are pitching the story for investors, especially at the level of SMEs or startups, what is the scalability? What do we know beyond our own boundaries? What do we know beyond our own country? Today, Sandra is looking at Uganda, but I'm sure what she's developing could be very good for Rwanda. And if you ask her, I bet that she will have very few means to come into Rwanda. And maybe the Africa Free Trade Zone that is being developed could be an answer to that. We need to help our SMEs, our startup, to be able to invest all across Africa. But there are many challenges, and we know that. So how can we get our stories nicer to investors in terms of projection? How can we get our story nicer to investors in terms of risk management? You know, just before you're talking about the cost of funding, how can we get access to cheaper funding? And, you know, in any country, the key rate that will define how much an SME or how much a startup can borrow will come from the state. So I'm sorry to go back again to the same. If it is expensive for our countries to borrow money, it will be as much and more expensive for SMEs. So it cannot be only an effort being made by the private sector, but also by the government themselves. So in what you ask me, being the devil's advocate, what you are not doing wrong, it's at all levels, starting from the government, then at the level of the private sector, don't know how to do it in some countries, but how can we get access to other markets? How do we understand those needs coming from venture capitalists and angel investors?
Sandra, when you're making your business plan or when you were starting out with these two companies, did you consider that, you know what, I'm not only thinking about Kampala, let me think Kigali, let me think Bujumbura.
I've thought about having the biggest vegan brand in East Africa and Africa even. And the plan was really to start off as a small eatery where I offered gourmet vegan meals to the people within my locality, which is in Kampala. We are the first vegan, 100% vegan brand. And the plan is to now sort of open a grocery store and scale up and even have our own brand of vegan products made, some locally and some internationally. But the challenges are very many to get to that point. And there's so many hurdles we've had to go through, especially in terms of information, teaching people about the lifestyle, it being a sort of new way of living, especially here in Uganda, where meat is looked at as sort of royalty, and it's looked at as a luxury. So making people understand that eating a plant-based diet is good for them has been a hurdle, and but it's one we're willing to take on because the vision is so big.
Vusi, how do you change that mindset that Tudi talked about, that Sandra has had to fight, of not thinking of your brand or your startup and not thinking of it as, you know, a Gauteng situation, only a Durban situation, but you're thinking Africa, that 5 years, 10 years time, I am going to take my startup across Africa?
Yeah, that's a good question. So a big part of the work we do is precisely around, so the way we think of ourselves as a firm is less as a venture firm and more as a venture platform. So for instance, the reason we have a partner network across the continent that we work with, so we're in South Africa, Botswana, Namibia, Kenya, Tanzania, Rwanda, Nigeria, Ghana, Morocco, and Egypt. And the way we've done that is because we work with partners in country that enable us the opportunity to scale and scale quickly, but have managed risk because we share success, right? So it's Africa's greatest challenge today. It's why we have the free trade agreement. It's how do we make the marketplace one marketplace? And there are a whole host of issues that are very difficult and complex. Issues around import and export duties, issues around excise duties, issues around taxes, et cetera, et cetera. It's a very complex issue. The best advice I give to entrepreneurs who come to us, who often we help scale throughout the continent, is follow our model, which is find an in-country partner that you can partner with and work with to give you local access and local insight. Otherwise, what happens is you do what large South African firms are well known for, is you start in your own country, you become a number one or number two, and then you go into another country and you seek to replicate your model. But you start at the beginning and you try to grow, right? And that model we know doesn't work fast enough, has too much risk. And as we've seen with many of the South African firms that have had to exit those markets, is often you get it wrong. So our hypothesis and the way we do it is actually find a local in-country partner, and that local in-country partner becomes your distribution partner with whom you share success as well as share risk. That way, the capital provision is different, the working capital cycles are different, but also the risk is different. At the end of the day, what you want is to get to the customer and to get the customer in the habit of buying your product. That's really what you're after. The modality around how to access it is what you have to think about. And the way we've done it is rather than go in-country and try to replicate, set up from square one, go in-country, find a partner, work with a partner, get the distribution right, test the market, test the model. So get customer feedback around product pricing, what should be your minimum viable product, what should be your pricing strategy, how big is the market, how do they like their product, how often do they want to buy, how much margin will you make, what are the distribution issues and complexities you need to think about. Get all of that insight in a partnership framework before you make the decision to go it alone and go into those countries alone. That, with over a decade of experience, is what we found tends to be the more effective way to do it.
Vusi, if I'm to stay with you there, you used a lot of looking inwards, and I want us to talk about looking inwards for capital. Now, capital outflow from the continent, and here let me just use the two of the three major markets on the continent, Nairobi and the Johannesburg Stock Exchange. Capital outflow when COVID-19 started was close to 30% on all those two stock markets in those two countries. Now, how do we look inwards and get capital and angel investors in the continent to invest in companies like Sandra's in the continent?
It's a good question, but you have to remember that you can't conflate the two, right? So the JSE is a traditional capital market system, and it's very different. I always say to people, the financial markets is not the real economy. Let me answer your question this way. If you want to support Elon Musk, then you don't buy Tesla shares. What you do is you buy a Tesla. If you want to support Jeff Bezos, you don't buy Amazon shares. What you do is you buy on Amazon, right? Africa's biggest problem today has been that people think the way to support businesses and to support entrepreneurs is to buy shares of those businesses and those entrepreneurs on the capital market system. But remember, the capital markets is a secondary market. If I'm selling my shares in Sandra's business to you, Sandra doesn't get money. I do, because I'm holding the shares and I'm selling them to you. So we have to separate the two. You have to separate the capital market system, the financial markets, from the real economy where real entrepreneurs build real businesses. So even though there's been a flight of capital or an exit of capital, and I haven't seen the numbers, but even though there's been an exit of capital, I still think it leaves an opportunity still for us in the capital markets today.
Ntuli, what are the opportunities that are the capital markets, and you are working on centralizing, let's say, the East African Securities Exchange? You're getting granted Tanzania and Uganda to have one securities exchange body at least. How do you get the small companies, to set up for things like IPOs to ensure that they can attract that kind of capital?
Okay. Arnold, before answering your question, maybe one point on what has been said just before on the challenges that you are facing. Information has been a word being highlighted by Sandra and Vusi, and we really have to acknowledge that for someone to operate in Africa, one of the main challenges is information. How difficult is it for Sandra to know what are the conditions to set up a business in Rwanda? The answer is easy, because Rwanda is one of the best country in terms of ease of doing business. But in other countries in Africa, it is a challenge. And like Vusi just said, for him to operate and to take decisions for investment in other countries, he needs to rely on local partners, because the local partners are the only one who knows how to get access to information. So this is an area where we think we should be spending more time to define the right way to get that information visible, visible and secure. Because even when we want to talk about capital market, the base of the capital market is trust. And that trust is coming from the possibility to have access to information that an investor can trust. So why do we think that certain companies have, let's say, are reluctant to list, to go to IPOs, as you have just mentioned, is because of this request to be transparent. So the culture of those companies in Africa has to be changed. We need to promote the good governance. We need to go back to the basis. Again, Vuzi as an investor, he wants to know where he will put his money. So Sandra, as a startup, must make sure that he has access to those information actually from South Africa without using a partner in Uganda. That will be the perfect scenario. But we understand that today it is better to go using a local partner to mitigate the risk. So what we are all aiming is in good information, good governance, and integration. We need Africa integration in all parts, being finance, being IT, being, you just name it. We need to integrate our systems and our framework. So as you have rightly said, in East Africa, like 3 or 4 days ago, there is a news about Rwanda, Burundi, and Tanzania putting effort to have one common capital market. And this is what we need to see at the level of the continent. Now looking at Kigali International Financial Center, still being a very small player, and we hope to be bigger in a few months, in a few years. But we are connecting ourselves to other big economies. We are connecting ourselves to other financial centers in Africa. And we need to see that momentum where we will be sharing information and where we will be sharing the good practices for Sandra business, not to be known only in Uganda, but also in Rwanda. So this is my answer to your question.
Thank you then, Tudi. And Sandra, in your closing remarks, with all these challenges that we've mentioned, let's see some light at the end of this tunnel. What are the opportunities that you think companies like yours can tap into in regards to these financial centers and stock markets?
I think one of the biggest opportunities has been the opportunity to work remotely and from home or from wherever you may be. I think we had a very African way of looking at working outside of the office. And I think this has given us an opportunity to realize that really it's not where you are. You can pretty much be productive from anywhere. It also gives us time to spend some time with our families. There also have been other opportunities like improving our product and pretty much adapting them to the needs of our customers. We've been able to sort of have a much better workplace because of COVID. We have improved hygiene. We've been able to strengthen our partnerships because we realize that you can't work alone. And in order to survive, especially in these unprecedented times, great partnerships are very important with suppliers, with media houses, with customers. It's given us an opportunity to build better relationships.
Thank you, Sandra. Unfortunately, I have the unenviable task to bring this conversation to an end and would like to thank our panelists today, starting with Tudi Moyelo. He's the strategic advisor for the Kigali International Finance Center. Sandra Asimwe, she's the CEO of Fresh UG and kokoballs. And Vusi Tembakwaya, CEO of My Growth Fund South Africa. As always, you can tweet us at CNBC Africa or tag me directly at The Real Kwizera to be part of this conversation. Enjoy the rest of your afternoon or evening.